I have finally figured out why Warren Buffett continues to buy Occidental stock, and it is not because price continues to decline. It's not because price has hit a monthly buyer's level at 54.50. It's not because he's going to earn $1 billion in dividends. Let's get into the answer. This article is coming from Reuters. Berkshire Hathaway said on Wednesday it has acquired more shares of Oxy, boosting its stake in the company to above 25%. Berkshire had also purchased 4.66 million shares on May 30th. Buffett began buying shares of Occidental last year around the time Russia invaded Ukraine, as oil prices were rising. It also recently owned about $9.5 billion in Oxy preferred stock, carrying an 8% dividend plus warrants to buy another $5 billion of Occidental shares at $59.62 each. Berkshire bought the preferred stock and obtained the warrants in 2019 when it helped finance Occidental's purchase of Occidental Petroleum. Now, what's interesting is he owns a quarter of all outstanding shares, or quarter of the company. However, at the annual stockholder meeting on May 6th, Buffett said he's not planning to acquire the company. Now, you have to take that as a grain of salt, because he amassed roughly 22% stake in BNSF Railroad before paying $26.5 billion for the remainder of the outstanding shares in the company in 2010. So he's not buying the stock because he wants to buy the company outright. Here's the real reason he's
outlook. We see global world oil outlook. We see global energy demand increasing by 23% through 2045. And I see no credible way to address this without utilizing all available energy sources and with energy market stability as a guiding light. Yes, renewables will play a much greater role. And contrary to what some may say, OPEC member countries are already investing significantly in this area. Gas, hydro, nuclear, hydrogen, and biomass will expand, but it is clear that oil will remain an integral part of the mix. Every data-based forecast that I have seen shows that oil is irreplaceable for the foreseeable future. In our world oil outlook, we see global oil demand rising to 110 million barrels a day by 2045, and oil still making up about 29% of the energy mix by then. A massive energy expansion is required as we see the global economy more than doubling in size and the world's population reaching 9.5 billion by 2045.
Regarding current price, it was a great buy at the monthly buyer's level at $54.50. Look for a target at the monthly seller's level at $84. And price should have no problem getting to these levels in the coming 12 to 24 months, especially with the recent announcement that Saudi Arabia and Russia will be cutting oil output. Thanks for watching. Subscribe. Please like the video.